welcome to this very special webinar. Investing in international stocks offers many advantages, and of late there has been a surge in the demand for international equities. More and more Indian investors are looking for avenues to diversify their portfolios and take advantage of the international stock markets. In particular, US markets have been the first choice for most global investors. And that is our topic for this very special webinar, Benefits of US Investing. And to decode these benefits, I'm joined by two very eminent guests, Mr. Deven Choksi, the Managing Director of KR Choksi Group, and Mr. Sitashva Srivastava, co-founder and co-CEO of Stockal. So we will be focusing today on not just the benefits of US markets, but also on how to build a robust global portfolio. So thank you, gentlemen, for joining us. It's a pleasure to have you here.
Thank you so much. Thank you.
Thank you.
Nice to be here.
Thank you so much. So clearly, when we look at US market, despite being hit by the COVID-19 and being badly hit, the US dollar has performed better than most other currencies. And like the Sensex, US markets have seen a bullish trend and is quickly becoming a high return option for most investors. So I'd like to begin by asking you, Mr. Sitashva, that how can Indian investors research American equities and where can they park their funds in mid caps or large caps? And do you think there's a strategy that Indians can apply when they're starting off their investment journey?
Right. Yeah. No. I think seeing the interest that has sort of emerged in the last 1 year, 1.5 years for US markets, I think a lot of Indian investors have already started relatively sophisticated investing in the US, which means they are already, they're more sort of well versed than we thought they would be when we first launched the product in India about 1.5 years ago. And where they do their research, I mean, US market information is probably the most commonly available, stock market data that's out there, with respect to research reports, with respect to fundamental data being available. On Stockal also, we have partnerships with firms like Morningstar and the SIP ranks. We provide a lot of inbound sort of, in-product research as well to our users. In general, though, there are platforms like Barron's and MarketWatch, which provide good sort of ongoing research capabilities to investors. And Morningstar, etc., Seeking Alpha, Motley Fool is a great resource as well. So there are a lot of online resources for research which people are dipping into, and people are really making use of it.
All right. Mr. Choksi, I'd like to bring you in here. What are your thoughts on this? Why are US markets perfect for Indian investors who want to expand their portfolio? And how do you think one can actually get started on their global investment journey?
Thank you for having me on the show. 2 or 3 primary reasons for which I think the investors are investing into the US market. One, importantly, they are the largest markets of the world. So obviously the liquidity flows maximum out there. And that is an important aspect. I think having got between NASDAQ and NYSE put together, both of them are, I think, around $51 trillion US market capitalization. We are falling at the number 6 at 3.4 trillion market cap. You can imagine that I think the liquidity is there. The second aspect about investing into US is that generally in US market, we have seen the newer businesses get listed first. We have been seeing the success story of FANG stocks, which is basically commanding about $10 trillion worth of market capitalization. And we have seen, I think, how the emergence of companies like Amazon, companies like Tesla, Microsoft, and similarly, I think the Facebooks, such kind of newer businesses, or Google for that matter, have emerged. And I think this is where, again, I think you got an opportunity. And the third point, I think, which is a reason for investing into US market is also to diversify the risk. You are domestically investing, and I think you are not investing in the other geographies. So obviously, I think by opening up another front, you are also diversifying your risk. So I think this could be the 3 prime reasons for which one could possibly argue for investing into the US markets.
Definitely. And investing in Apple, Amazon, Netflix, or Facebook for that matter is obviously a very lucrative option. So I'd like to come to you, Mr. Srivastava. Let's talk about ETFs. So the growth and evolution of ETFs is considered a great tool due to its high liquidity and lower investment requirement. So let's talk about that. How can they come into the strategy while investing in global stocks?
Sure. So much like, a lot of Indian investors tend to choose mutual funds as the way to sort of participate in the Indian market. Mainly because mutual funds help you diversify your risk. Mutual funds also help you invest in lower volatility instruments rather than investing directly in stocks. ETFs are the popular instrument in the US. The ETF flows are about 70% of the retail flows in the US when it comes to just retail investors looking at the market. ETFs should be part of everybody's strategy. ETFs are again, they are indexes basically, so they are diversified across multiple individual stocks. You don't have to research individual stocks if you invest via ETFs. Given the fact that a lot of retail investors may not have the sophistication to understand individual stocks deeply enough as well, research requirements are lower when it comes to investing via ETFs. So I think ETFs need to be a large part of especially retail investor portfolios, because the degree of sophistication required, the degree of research and hard work required, the degree of depth required will be lower when investing via ETFs. Also, lower volatility because they are inherently diversified. So, from a retail investor's perspective, again, using ETFs as an instrument is generally considered more prudent than individual stocks, unless, of course, you are well versed with the companies that you are investing in.
All right.
And on Stockal also, I mean, almost 30% of people's portfolios are actually in ETFs. So it's a very popular instrument or asset class for people.
All right, but the awareness of ETFs is still relatively low. So, Mr. Choksi, would you like to add something here? What is your take on ETFs?
Well, I think on one side, the requirement of research is less. So obviously, I think at a lower cost, the product is available for investment. That is the first point. Second point, most of the ETF would like to trade the market using the algorithms.
Sure.
So obviously, I think their entry and exit from the market, I think, would be driven more by the actions of the machine or the program. So that again, I think, resolves, I think, one important aspect of biases which the fund managers otherwise would have. So that part is taken care of. And having said that, I think the more important part is that this kind of investors, they typically look at outperforming the benchmark indices and generate return out of it. So again, ETF, I think, registers the case out there. I think the product in itself, I think, has attracted significant amount of, I think, traction over last 10 to 12 years, particularly after 2008, when most of the hedge fund managers failed in evaluating the entire subject of, I think, how the global market should be played. So I think ETF probably came into emergence thereafter, and the vanguards of the world have actually, I think, made the best out of the kind of a product of ETF. Yes, I do agree that I think there is a lack of awareness. I do agree that there is not enough amount of research available on this subject, at least I think for those people who want to act on it. They would probably like to, I think, read lot many things. So these are some of the issues that can come in the way. But as it progresses, I would think that I think things are looking quite all right. In the US market, ETFs have been extensively looked at. India market investors still struggle a lot, little bit of a nature because of, I think, the awareness is little less.
Sure.
Maybe it's a matter of time, I would say.
Yes, hopefully there would be an increased awareness. So, Mr. Srivastav, coming back to you, let's discuss a very pertinent topic, which is the concept of wealth baskets or pre-configured portfolios, which Stockal is actually quite popular for. So, could you enlighten us? How does it really work? What are the most popular stacks, and what is the whole concept behind them?
Right. So I mean, the idea sort of stemmed from the fact that people's awareness is low. Exactly the point that you made, Ruchira, in stocks as well as in ETFs, right? And a lot of people who would first try Stockal, they started with things that they understood or they thought they understood, like investing in Amazon, investing in Apple, Netflix, just looking at FANG and then Microsoft, Tesla, the popular common stocks or brands that they already knew and understood. But beyond that, people started asking, what if I have another $10,000 to invest, another $5,000 to invest, but I don't have time or the ability to do a lot of research. We thought that what if we could create portfolios, or if we could offer portfolios that people would easily invest in and with high degree of liquidity. Also, a lot of people tend to look for advice when they're investing, and especially when they're investing overseas. It's a market that's alien to them.
Absolutely.
So they haven't really been able to spend enough time researching
And
it.
going by gut feeling is probably not the best move, or gut
Yes.
feeling, or just online research.
It is not. It is not. And how much will you follow your friends? How much will you follow this, people who you think are experts in the space and
Mm.
stuff? So what we did therefore was we went to experts. So we went to asset management companies, we went to wealth managers, we went to portfolio managers in the US,
Mm.
and we requested them to create portfolios,
All right.
which they would then manage thereafter. And we said we will put your portfolios on the Stockal platform, and we
All
will
right.
then have investors invest in these portfolios at the click of a single button. And we branded that product Stacks. So it's a
Mm.
curated portfolio platform. Portfolios are made by high quality wealth managers, asset management companies. For example, we have partnerships with companies like Global X Fund, which is
Mm.
owned by Mirae Asset Management. We have partnerships with firms like Validia, which is a large portfolio manager in the US, and various other wealth management firms as well. So we bring those products to retail investors, and we give it on the Stockal platform. And
All right.
because of fractional stocks, people are able to invest even $1,000, $500,
Mm.
$2,000, $10,000 in those portfolios. So in a way, your ability to access high quality portfolios becomes high, even with
Mm.
very low ticket size investments.
And the risk obviously is lower because you're leveraging the a wealth of knowledge of experts.
The risk is lower. The expert is managing the portfolio, so the
Mm.
rebalancing, etc., all happens automatically. As an investor, I don't have to keep looking at my stack.
Exactly.
And if I have more money to invest, I can diversify across various stacks.
Mm-hmm.
So the risk is even lower. And then my participation actually is via thematic understanding. So you're asking about popular stacks. So for example,
Mm.
electric vehicle stack is a very popular stack on the Stockal platform. Now
And so
these
is
are
I think the US blue chip portfolio, right?
very naturally, because people understand that, hey, if I'm looking at the market, as an Indian, my exposure to the US market is because I don't get to invest in enough technology or technology product companies in India.
Mm-hmm.
When I look at the US, in US blue chip tech are largely tech product companies, but
All right.
beyond just the FANG company. So it's a very popular stack. Electric vehicle is EV is the theme of the year, if not more, right? So all over the
Mm.
world, there are companies in EV which have done really, really well. So it's
All
again a
right.
very popular stack on the platform.
All right. Mr. Choksi, do you have any thoughts here to share with us?
Well, I think as rightly said, so that you allow the proven fund management skill to come onto the platform
Mm-hmm.
and let investors choose. I think the credentials of the fund manager would itself, I think, would let investor become more comfortable in selecting the choice of the portfolio.
Mm.
So this becomes a very new trend, very acceptable trend now. In India too, I think similar trend has been prevalent. We have been offering the similar kind of products, I think, in India market for to
Okay.
our investors. So obvious it is that I think with this particular customized basket, as we call it as a trend, which is basically meant for generating absolute return.
Mm-hmm.
On one side, the ETFs are basically producing the benchmark return. The customized or the theme baskets, basically they result in providing the absolute return to the investor. And
Mm-hmm.
the scheme of the fund manager is in the game hereafter. He would basically make sure that the right kind of product is put across for the right kind of investors. Of course,
All
there
right.
are chances that I think somebody might end up doing some mis-selling, but I
Mm-hmm.
would think that over a period of time, once you start practicing this kind of a product, you would probably, I think, acquire the expertise of managing the selection of the product as well. In my
Exactly.
viewpoint, I think we tell investors the time is such that I think the products are becoming more and more complex.
Mm-hmm.
Investment is not remaining very easy subject. Though
Absolutely.
execution becomes absolutely easy, I
Mm-hmm.
think selecting the right kind of product in your portfolio for creating your wealth, I think it is becoming challenging. So that is a time when I think the way in which the US market has shown the RIAs have emerged over last
Mm-hmm.
10, 20 years, and I think they become a very prominent community to advise to the investors. I
Absolutely.
would consider that investors would seek and should seek the advices of the independent advisors who are basically providing the right kind of advices to the investors. I
All
think
right.
that is where I think you can manage your wealth much better. On one side, I think you are saving on the execution cost.
Mm-hmm.
On the other side, I think you end up paying some sort of money to the advisor. Probably, I think you would be far better off in managing your investment through the advices of the advisors.
Definitely. And it's also about leaving, what they do best to them rather than struggling ourselves. So moving on to the next question, Mr. Srivastava, I'd like to come to you. Let's talk about the LRS scheme. So tell us about the liberalized remittance scheme. And according to that, of course, Indians can remit up to $250,000 in a financial year. So that is, of course, a great opportunity. So what are your thoughts on that?
Right, no, just as you mentioned, right. So fortunately, this is an area where RBI has very clearly defined guidelines, and in an environment where clear regulation is super important for platforms and businesses to succeed, and also for investors to do well. I think this was very welcome when we initially understood LRS. I think we were very delighted that it's fairly well defined what investors can and can't do, or rather what Indians can and can't do under LRS. So $250,000 per year per tax filer is the limit, and for most retail investors, it's a sizable sum. I would think, and people within $250,000 cover everything. So this is the total limit for remittance abroad. It's not the limit for total investments abroad. So which means that if you're spending, let's say, $50,000 on kids' education fees that you're paying to a school outside of India, then that would also come within this $250,000. So all put together, everything that is outwardly remitted from India for an individual is $250K. People have been utilizing this fairly actively. We are seeing many investors who sort of exhaust their limits as well. We've also seen families open multiple accounts and manage larger sums, because again doing it via various accounts as is legally permissible. But a lot of investors, don't really end up investing $250,000 in a single year anyway. So a lot of people tend to invest $10,000, $15,000, $20,000 through the platform, and I think that's great. I think that's where the true democratization of the opportunity is. People with $500,000 or $200K were anyway able to find a way to invest anywhere. But when it came to people who wanted to invest $10,000, $20,000, 10, 15 lakh rupees or so, there were not too many platforms out there. There was no way to do this 2 years ago.
Absolutely.
And I think that's where that's what excites us.
But you mentioned family members. So can one trading account be split between various family members?
Legally, yes. Although on the Stockal platform, we are yet to launch like a consolidated family account. We will in the next financial year, US financial year. So maybe Q2 of the calendar year, next calendar year, we'll have a functionality where I can open an account and then I can open a sub account for my son. So these things will become possible. But legally, yeah, two members of family can have a consolidated account, and when you are remitting money from India, you could use the LRS limit available to both of them separately.
All right. So coming to you, Mr. Choksey, let's compare US markets to the Asia or the Latin American markets. So what are your thoughts here? US markets is, of course, a more promising opportunity for Indian investors. But if we do a comparison, what are your insights?
I would say that I think India market is equally promising for the investment. In fact, I think more promising hereafter, largely because of the way in which the entire fabric is woven, the structured as far as economy is concerned. Right. We are currently an economy of around $3 trillion, and we are moving in the direction of $5 trillion by 2025-26. And God willing, I think somewhere in 2030s, we should be at $10 trillion economy. So from $3 trillion to $10 trillion, which is a 3-time growth in the economy, would translate into, I think, similar amount of growth into the market capitalization. That is not doubted. You are right now $3.5 trillion market cap. I think we are likely to be, I think, $10 to $12 trillion market cap in next decade. So I think from that perspective, if you are looking at it, I think we are giving a reasonably high amount of growth as far as the investment opportunity in India is concerned. Right. And in my viewpoint, I think the growth in India could be probably faster also, largely because of the fact that I think our economic growth is also moving faster. A lot of global investors are investing into the country. Our companies are also becoming global size, and something which happened in USA last 10 years back, I think is now happening in India this 10 years. In fact, I think the newer generation of businesses have started getting listed. And my reading says that I think in next 10 years time, the digital businesses could be, I think, probably commanding significantly higher amount of market cap. So if you are strictly comparing US market with India market, I would think that India market is catching up very, very fast. Newer businesses are getting listed. Digital is going to be the name of the game. And many of the businesses, including, I think, like for larger groups like Reliance, including groups like Adani's, even Tata's, I think they are all basically gearing up for the new generation of business. So I would not discount India market. I would rather think that we have got a good opportunity out here as well.
Definitely. And that is absolutely a promising trend. But coming back to the top trends that you see at Stockal, Mr. Srivastav, as he also mentioned, Mr. Choksi mentioned that technology stocks are really sought after. So what are the top key trends that you've been witnessing at Stockal of late?
So three, four things, I think. Technology, obviously, considering it leads the US market as well. People have invested a lot in technology stocks. Then pharma has been very interesting. So people who wanted to invest in, especially with Corona, vaccines getting approved in the US, so Pfizer, Moderna, etc. I think people were able to participate in the in that market as well, which was otherwise impossible. So pharma was a great area for people to invest in. Then there are companies like which went IPO in the US. So a lot of tech IPOs, a lot of non-tech also IPOs that happened in the last 1 year. So companies like Airbnb, Coinbase, etc., which went IPO, Snowflake, and all. Then Robinhood earlier this year. So that was another trend. Coinbase was especially interesting because it was, in a way, people's method to participate in the crypto market without investing in crypto. So that was again very interesting. And then travel and hospitality, because as a sector, it went down when pandemic started, and when the oil prices were also sort of going. And companies like Boeing, for instance, they fell like 70% at the beginning of mid 2020, and then Boeing came back 101% over the course of the rest of the 12 months or so. So I think people were really able to take advantage of that as well. So it's, I think, opportunities which are less available in India that people are looking at when they look at outside of India, or especially in the US.
All right. So, Mr. Stocksy, what are your thoughts here? Post-COVID-19 recovery, of course, would boost American companies and trigger this huge consumer story. So, what, according to you, are the major sectors to look out for?
From India perspective, if you are asking me, then probably
for Indian investors investing in US stocks.
In US stocks, I think definitely the trend would continue to be on the digital side of the businesses. In pharma, also the tech businesses are likely to be looked at, I think, very, very systematically.
All right.
In fact, I think already the investors have started investing in SPACs, the special purpose acquisition companies. There people have started putting in money, and they have been making fortunes out of it. The 5G's emergence is also going to play a major role in putting, I think, the newer businesses into the markets. In fact, I think those businesses which have the ability to make an impact, or those businesses which have got the disruptive capabilities, are the ones, I think, which are going to be sought after maximum by the global investors, because they believe that, I think, this is where the new money can be made. In fact, if you see how the S&P 500 has moved in last 10 years versus, I think, the FANG stocks, or I think FANGA stocks, you will find that, I think, practically the amount of market capitalization lead has been taken by the new generation of businesses. So I would rather remain more confident on that side, that be it in pharma, the tech, education, tech, in finance and investment, the tech part, in agribusiness, the tech part, in alternate fuel, the tech part. Wherever I think you see the tech attached, probably I think
technology is the variable, common variable.
That is the way to go in US market.
Yes. All right. So coming back to you, Mr. Srivastav, as we were discussing technology, fintech, of course, has really grown in India, and even in the US, Bill.com and Intuit Software have had a dream run, and such unicorns are, of course, very appealing to Indians. So what are your insights here now that they are actually accessible and appealing for Indian investors?
Yeah, I mean, like Mr. Choksi is saying, right, tech companies in any sector are very interesting, and many of them are listed in the US. So within financial services, I think fintech has done tremendously well. You took two names. I also see Robinhood as another one, Coinbase as a fourth one perhaps. These have done, IPOs, and they've done subsequently. They've done well as well. So Indian investors, I think it's a good opportunity for Indian investors to finally be able to invest in these fintech companies. Hopefully, some fintech companies will get listed in India as well. I know Paytm IPO is coming up, MobiKwik is coming up, and some more will happen. But I think so far, the ability to invest in fintech as a retail investor is lower unless you are able to invest in publicly listed companies. And companies like Bill and Intuit, and then companies like Robinhood and Coinbase, etc., are a great opportunity. We saw something very interesting happen with Robinhood, for instance. When the IPO happened, so when a US IPO happens, retail investors are not able to participate per se. You invest upon listing and not pre-IPO. Like in India, we can subscribe to IPOs. It doesn't really happen in the US. But in the case of Robinhood had given its users the ability to subscribe to the IPO if you had a Robinhood account.
All right.
So a lot of US investors, I think about 300,000 US investors opened or had Robinhood accounts, and they subscribed to the IPO as well. Now, when that happened, the price of the stock did not really rise. There was no pop. In fact, the stock fell a little bit because the investors already invested. They would have otherwise invested post IPO. Now, the Indian investors basically came into the stock about 4 or 5 hours after when the listing happened. Right? So they came in about 4 or 5 hours after the fact, and they therefore came in at about 10% lower price than the IPO price.
Okay.
And then the stock went up. So it was a very interesting observation from an Indian perspective. It was very, very interesting because, well, pretty much all of them, came in about 10% cheaper than the IPO.
Definitely. Thank you for sharing that anecdote, and that was actually a great opportunity for Indian investors. But let's talk about exchange rates. So that's again a common concern. So should one always track the rupee to dollar conversion while booking profits? What are your thoughts here?
Well, you have to. I mean, that's your consolidated investment, right? So you sort of have to, and one has to take the rupee dollar equation in account on two counts. One is when you're considering your costs of investment, because the cost of investment kind of also includes the cost of forex, cost of remittance, and therefore that needs to be taken into account. So if investors are investing very small amounts of money at a time, then it usually becomes slightly expensive because there are bank costs on the forex side, and then of course when you're booking your gains and losses, then you have to take into account the fact that you actually reporting your income in rupees, and as and when conversion happens, that needs to be taken into account.
All right, Mr. Choksi, what are your thoughts here?
I think India is still not capital account convertible country, and I think we have no choice but to inflow and outflow, both sides. I think you have to pay the cost. You ended up investing, I think you have to convert into dollars. You ended up receiving back into your divestment funds. I think when you receive it back, I think again you have to pay the cost of funds. There is no choice left on this. But as I see it, I think if the currency of ours is depreciating, then probably I think you are not in a very bad situation either. I think you might probably end up getting your dues in a rightful manner. And maybe I think you'll have to factor this as a part of our investment cost. I think that is how I look at it. The larger funds who are operating, the mutual funds who are investing overseas, a part of their portfolio, they are actually doing the hedging, currency hedging, and they factor the currency hedging cost in the process. So such kind of practices are prevalent, and I think that involves larger part of the role play. But I think an individual investor won't be able to do all such kind of things. So they might have to factor this as an additional cost. I would call it, simply put, consider 5% additional cost of your funds as a cost of, I think, managing the currency fluctuations. And I think if we investing into this particular proposition, so whatever return that you generate, I think consider that 5% is going to be the cost of currency. That is making life simple for investor, I suppose.
Sure. So before we wrap up,
on that note, just one extra point I had on that note. As the flows are increasing, we have seen those costs go down as well. So, banks are also aware that increasing costs will ultimately hurt investors. So we are seeing active efforts on the bank side to actually reduce costs over a period of time. So hopefully that will happen as well.
All right. So just before we wrap up, I wanted to ask both of you, we spoke about technology, travel, hospitality, but if I were to ask you the top 3 sectors that Indian investors should keep a close eye on while investing in US stocks, could you tell us those? Mr. Srivastava, you could take this first.
Okay. So I think when you're looking outside of India, technology has to be looked at, right? So I would say technology product companies of all kinds, be it retail, be it financial services, be it pure play AI innovation and stuff like that. People should look at them. Then energy, so electric vehicles. Again, these are themes. It's another theme which is probably moving the world forward for the next 5-10 years. So I would look at that as well. And then anything which has to do with consumer or consumption in the US. Consumption is going to come back. It is already coming back. So I think that's the third one. Be it retail, be it consumer goods, which are consumption-driven companies.
Sure. Mr. Choksi, what, according to you, are the top 3 sectors for Indian investors to keep an eye on?
Just to add on further, I think whatever has been spelled out just now by Srivastava, I would think that the important aspect out here would be to look at the pharma and the bio. I think that biopharmaceutical businesses are going to probably play a significant role. Healthcare is going to be one major subject which is going to play a very dominant role. So I think the companies in that space would be, I think, more meaningful. 5G is also creating a very large amount of opportunities for, I think, a lot of global investors. And with 5G, I think the conventional businesses are going to make a significant amount of change. Whatever change we are seeing in investment business today, I think we are likely to see the similar kind of a change in a proposition like insurance. So probably I think this is one area where I think one could look at it. And third thing, with the blockchain's emergence, in my viewpoint, I think the companies offering the solutions on the blockchain side and the cloud computing and AI side, I think are the companies should be looked at in the IT space. They could possibly be one of the smartest revenue generators, and I think also providing a significant amount of return to investors. So look at such kind of companies as well.
Definitely. So healthcare, travel, hospitality, technology, and definitely emerging technology investors need to keep a lookout for. But one last question, that for someone who's just beginning their global investment journey and who has been tackling fear of uncertainties and decline in the rupee, what is the key takeaway that you would like to share?
I think instead of, I think, chartering into an unknown water, probably it is better to go with the theme basket approach, or else I think ETF approach for the new investor. And as I said earlier, I think we take the advices of the advisor, which may probably make your capital safe. At the same time, I think your journey of investing would become much more smoother and I think enjoyable. This is a small point which I would like to discuss.
All right. What about you, Mr. Srivastava? One quick tip for our viewers.
So yeah, absolutely. I agree with Mr. Choksi here. Looking at stacks is a very good idea. It keeps it simple and safe. Although I do see a lot of young investors, trying to start with what they understand, like Apple, Amazon, and stuff. And thankfully, these companies have done well. Tesla, Apple, Amazon, and thankfully these companies have done well in the market. But I think looking at stacks and then some of these tech ETFs, I think is a good idea to begin.
So thank you so much, gentlemen, for sharing your insights with us. This was a very thought-provoking discussion, and clearly Indian investors need to invest globally if they want to expand their portfolio, and a global portfolio is the best way to yield better results for long-term horizon investors by successful diversification and also investing directly into the stocks of US markets and in focus on wealth creation going forward. So thank you so much for being here with us, and thank you for watching.